Welcome back to Candlestick Signals for today's market. July 25th, 2025. We're diving deep into the candlestick signals that are shaping today's trading landscape. Buckle up because we've got some fascinating patterns emerging that could make or break your investment strategy. Let's kick things off with a bang. The S&P 500 just hit a new all-time high, surging past the 6,400 mark for the first time in history. But here's the kicker. It's not just the usual suspects driving this rally. We're seeing a seismic shift in sector leadership that's turning heads on Wall Street. Our spotlight today is on the technology sector, which has been absolutely on fire. This powerhouse led the charge last week with a staggering 8% gain, translating to a market capitalization increase of $57 billion. That's not chump change, folks. Software and IT services were the standout performers, each clocking in gains of around 8%. Meanwhile, hardware and storage weren't far behind, posting a weekly return of approximately 7%. Now, let's get technical. The technology sector formed a bullish continuation candlestick pattern last week. For those of you new to candlestick analysis, this is a hugely positive signal. It tells us that the current uptrend is likely to continue, with buyers firmly in control and pushing prices higher. We've seen strong momentum in tech for quite some time, and all signs point to this positive trend persisting in the near future. Keep your eyes peeled for potential new highs. But it's not just about tech. The broader market is showing some intriguing patterns as well. The Dow Jones Industrial Average closed at 44,693, just shy of its all-time high. We're seeing a classic indecision candle here, a doji with a long lower wick. This tells us there was an early dip in trading, followed by a significant recovery. The bulls managed to push prices back up, but couldn't quite clinch that record close. Over on the Nasdaq, it's a different story. We're looking at a small bullish body closing near session highs. It's a clear indication of persistent buying interest throughout the day. The extended upper wick suggests some late session profit taking, but overall, the momentum remains decidedly upward. Let's break down some key levels to watch. For the S&P 500, we've got crucial support at 6,217 and 6,259. On the upside, keep an eye on resistance at 6,417 and 6,381. The Dow is finding support around 44,423, with that elusive all-time high lurking just above at 44,983. As for the Nasdaq, support is holding firm at 20,950, with today's high of 21,113 serving as the immediate resistance level. Now, let's zoom in on some sector-specific action. Consumer discretionary and materials were today's standout performers, advancing between 1% and 1.7% on the S&P 500. These sectors are showing strong bullish candlestick patterns, indicating potential for further upside. In the world of big tech, we saw some fireworks after hours. Alphabet and ServiceNow both knocked it out of the park with their earnings reports, leading to bullish breakouts in after-hours trading. On the flip side, Intel took a beating after disappointing guidance and capex cuts, resulting in a bearish engulfing pattern that could spell trouble for the chip giant. The industrial sector painted a mixed picture today. We observed some profit-taking in select names, with spinning top candlesticks forming after earnings announcements. This suggests a degree of uncertainty and potential consolidation ahead for these stocks. Now let's talk sentiment. The CBOE Volatility Index, or VIX, is holding steady around 15.4. This relatively low reading indicates calm trading conditions and a generally optimistic market mood. Trading volumes were above recent averages, signaling healthy investor engagement. Looking at our technical indicators, MACD remains marginally above the signal line for both the S&P 500 and Nasdaq, confirming the ongoing bullish momentum. The Dow's MACD is more neutral, reflecting its recent pullback. RSI readings are sitting in the upper 60s for the S&P 500 and Nasdaq bullish territory, but not quite overbought yet. As we look ahead, the market's focus is shifting to next week's Federal Reserve policy meeting and the looming August 1st U.S. trade negotiation deadline. These events could be major catalysts for market movement, so stay alert. In conclusion, today's session was technically constructive, with most U.S. indices extending their record runs. The candlestick structures we're seeing, particularly in leading stocks and sectors, suggest that buyers remain firmly in control. However, we're approaching overbought territory in some areas, so caution is warranted. The near-term path of least resistance appears to be upward, but we can't ignore the potential for surprises. Keep a close eye on those key support and resistance levels we discussed earlier. Any decisive breaks could signal a shift in the current trend. As we head into a pivotal week of earnings and macro news, remember to manage your risk carefully. While the bulls currently have the upper hand, markets can turn on a dime. Stay informed, stay nimble, and most importantly, stay profitable. That's all for Candlestick Signals for today's market, July 25th, 2025. Remember, in the world of trading, knowledge is power, and patterns are your roadmap to success. We'll see you back here Monday. The information presented in this report is intended solely for entertainment and informational purposes, and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.